Hey, welcome to the Cube Pod, episode 108. Dave, salute to you.
Hello there, John. How you doing?
Such a formal salute there. I don't know. It's like you've been military trained.
Good to see you this week down at the New York Stock Exchange. That was fun hanging with you.
Yeah.
Yeah.
I mean, what a busy week, man. We were here at the NYSE Cube Studios for the NYSE program, and a lot of action on the news. You saw Intel had their earnings yesterday. Big story. We'll get to that. But the big story was it was tech fever, enterprise tech fever in Washington, D.C. President Trump's AI action plan was issued this week. Great to see David Sachs up there, really kicking ass. I got to say, he's got his fingerprints all over the policy, AI and crypto. Crypto in particular, we had Tom Lee on yesterday. I interviewed him. We had a bunch of other ones, Ken Goodwin, really talking about how policy and law needs to be put in place for crypto to take off. And you're starting to see the building blocks of that. I think the Trump's AI event, the All In guys held a session. Actually, the NYSE was a big sponsor. The chairman of ICE, his wife, she runs the SBA. She was on stage with the All In guys, Jason Chamath, Sachs, and Freeberg. And they had platooning in. Keith Rabos went in there, and a bunch of other folks. So, a huge day because the AI competitiveness is huge. Jensen Huang was on there from NVIDIA. The U.S. is very serious about the AI wave, Dave, and I think this is huge for the industry as we lean in as a national, defense, national sovereignty. AI race is on. We've been saying it. We said it was going to be a Cold War, but I think it's got to be more open, borderless communications, borderless commerce. So crypto and AI, really the dominant themes in David Sachs's agenda, but also we seeing on theCUBE. JD Vance was on there as well on their show, which is a big stage performance. He even said something we've been saying on theCUBE, that the geopolitical, first time anyone said this out loud in public that I've heard, besides theCUBE, us, is that there could be a reconfiguration of geo. And he actually said a country that wasn't in NATO said they should propose an alternative NATO based upon the AI capabilities and crypto, which is essentially an energy land grab reconfiguration. So much to unpack with that. Tons of news. Amazon bought B, Microsoft SharePoint, huge hole and vulnerability. AI earnings, Alphabet, ServiceNow,
IBM.
I mean, the Mag 7 stocks are continuing to soar. And then, of course, the Intel news wasn't a surprise, but, it is starting to become definitive. A lot of things you've been talking about playing out. So I don't know what you want to take first, Intel or the for America?
I mean, we pounded Intel here. I feel like beat that horse, but it's exactly what we said in our last breaking analysis. They got to dial down the investments in foundry. They're going to lay off people. They're going to write off assets. They're going to, continue to lose money for a period of time. And, semiconductors, you don't just turn around overnight. It's the restart of Intel. So it's playing out exactly as we had thought. And, the outcome is going to be, Intel is going to be a shell of its former self. NVIDIA is now the new Intel and Wintel, actually, as we've talked about. And, I think Intel's foundry, which I'm not happy with where they're at, but it's going to end up, somewhere north of global foundries and somewhere way, way, way south of capabilities relative to TSM. I heard Lisa Su on the All In podcast saying, the TSM fabs out of Arizona are producing decent yields. They're going to be more expensive. One of the All In guys pushed her on the cost. I was really pleased to hear that. And she said, it's not going to be 50% more, but it's not going to be 5% more either. It's going to be in between. She said high double digits. So I would have pegged it at 15 to 20% more expensive in the US. Or maybe she said high, yes. She said, or maybe she said low double digits. But anyway, I would have it somewhere between 10 and 20% more expensive. Intel, on the other hand, for advanced processor or advanced chips, is going to be 30 to 40% more expensive than TSM. And so I still am very concerned about Taiwan. China takes over Taiwan, where does that leave U.S., advanced manufacturing? But it is what it is. And so again, Intel, playing out exactly as we had thought. And basically they're set to, lay off, 15% more of the staff. They had some special charges. Stocks was down, what, 7% today, I want to say.
Yeah.
Down 8%, 8.5% today.
The market's up to over 250 points plus. I forget what it closed. It's up at 280 and 260, and I forget what it closed at. The board on the options, only one green line. That's Tesla options, one of the options. Everything else is red. The market's up. Usually options are down. A lot of volatility.
I got to tell you, the highlight of my week was listening to your Tom Lee interview. It was so good. Tom Lee, of course, is the head of Fundstrat, and a really sharp investor. It was so good, John, that I decided to do my breaking analysis on your segment and on crypto, particularly stablecoins, kind of an explainer on stablecoins. But your interview with Tom Lee was so good. Here's why. I watch CNBC every day. It's on here. Every time I leave, Butler turns on Bloomberg because he likes that better, but I like CNBC. At any rate, it's always Joe Kernan interviewing Tom Lee. And it's the same framework every time. Market's going up. He's a perpetual bull, or it's going to go down, but then it'll go back up. So buy the dip. The same thing every time. What you did with Tom Lee is took him into a new realm. You guys talked about stable coins.
The CUBE realm, baby, the CUBE realm.
CUBE realm. You talked about stable coins. I encourage everybody to go listen to this Tom Lee interview that John did. You went deep. You talked about the tech. You talked about U.S. Treasuries, but you talked about the whole crypto market. He talked about yield. He explained why stable coins are so attractive. He talked about his fund, which is throwing off $100 million in cash annually. I mean, just a fantastic job. No repeat of what you get on CNBC.
You got the option bell closing here behind me.
Oh, yeah. It's 4:15.
Closes 15 minutes after the market. Yeah, I mean, Dave, what's interesting about him was he took over a company just in July and it's skyrocketed. He took a whole different micro strategy approach with Ethereum. And Ethereum, as we know, is programmable money, as you heard in the interview. But what's interesting is he's taking the largest position of Ethereum and then staking it. And the money he's making as a delta between, say, the banks and world banks is throwing off 100 million in net income. And he's not even doing anything with it, right? So this is you're gonna start to see some of the crypto economics, token economics, and then as things go on chain, real world assets, you will start to see new financial plumbing. Another interview that's not as kind of glamorous as Tom Lee was Ken Goodwin. He also teaches at New Jersey Institute of Technology, old school guy, knows all the tricks in crypto early too. He got in probably a few years after we started covering it for sure and getting into it deeply. He actually talks about some of the real challenges and blockers around some of just the financial reporting. Like, for example, Elon Musk puts all his Bitcoin as intangible assets, and that's a completely different tax treatment and treatment on the balance sheet. So there's all these old school regulatory and antiquated processes and procedures that are going to be disrupted by the crypto revolution. And anyone under the age of 25 certainly wants digital money. Anyone under the age of 30 sees the potential, and everyone over 35 is like, what the fuck is going on, right? So like you have the collision of two cultures with crypto right now. And because it's now going mainstream, you're going to impact entrepreneurial opportunities. You're going to impact the financial system, which is kind of stovepipe, to use your term. You got banking, you got money systems, and you got institutional trading. Those things tend not to be connected.
Right.
So you look at that and you say, man, someone's going to disrupt this. So if I'm ICE or NYSE, I know they're looking at this. They have a variety of technologies that they're working on. And I know that all the big banks, JP Morgan Chase, Fidelity, others are all looking at stable coins. You will see stable coins absolutely continue to thunder away in relevance. How many stable coins will there be? But I guarantee you every single bank will have a stable coin. The big ones. Because
I thought
they're going to put the guardrails, put all the KYC, all those governance, that the stuff that they need to in there. Once that's in there, it's going to be off to the races.
what a flip-flop from Jamie Dimon when he first came out. He was negative on on crypto, and then of course he started buying. He's such a market manipulator, and the thing dropped, and then he started
I
buying.
mean,
But I thought,
he knew when he said that they were already working on it. JP Morgan's ready to go from what I can
oh, of
hear
course.
here in Wall
So
Street.
one of the most interesting things of that interview, there were like 10 like really awesome nuggets, but one of the more interesting ones is he asked you, ever been to Bermuda? You know, the Bermuda currency. Well, the Bermudan currency, the BMD, is pinned 1-to-1 to the US dollar. And he's like, it's not backed by anything. It's like a tracking stock. Like, remember Dell floated the VMware tracking stock? It was like, so his point was stable coins are more stable than the Bermuda currency because the Bermuda currency is not backed by anything, and stable coins are backed by US treasuries or dollars. So that was really interesting. And because, a lot of times what's been happening is these stable coins have been outperforming local currencies. So this just positions the U.S. As a real leader here. Now, there are some concerns. A lot of people are sort of sounding the alarm on this.
No, I think the guy, Ken Goodwin, laid it out. It's not going to be an overnight success, but it's going to be a progression. Dan Taperio, as you know, he took Circle public. He was early investor. He's also in Cursor. He's in a bunch of the companies. Ledger is out in Paris. I visited their office. Dan's kind of plugged in, as is Tom Lee. And they're all saying the same thing. These are real businesses. And no one's ever seen this before. So you're going to have a first time opportunity for anyone who's in this market. Now, I brought up with Tom Lee, I don't know if you caught this little nuance, but I said, isn't a crypto and blockchain the ideal pure capitalism because of the transparency? He goes, it's Darwinism.
Yeah, totally.
That piece. And after I was out in the hallway here talking to him and a bunch of other folks, some insiders, and they're like, that's what Wall Street is. Wall Street is Darwinism because any flinch, any weakness in the market, and that's what markets do. Free markets do that. Free markets definitely trade on what is available and what the opportunities are. And there's always going to be arbitrage, right? So whether you go back and review the old days of that book, The Flash Boys. Remember Flash Boys?
Of course.
Frequency trading. You're going to start to see things like that emerge in multiple areas. I think the software revolution, software eating the world, needs to be rewritten for crypto and needs to be rewritten for AI, specifically in the ability to dismantle pre-existing industries. And I think it's going to be a huge opportunity for entrepreneurs and people who have money. So I think, if you're not leaning into it, and that's why I like what David Sachs is doing over on the Trump administration. He is focused like a laser on the key policies for AI and crypto to usher in lawmaking, because without policy and lawmaking, the banks and all these enforcements, you can't have regulated industries without policy and law. So those are the two major blockers right now from full Armageddon of innovation. So, I'm telling you right now, it's going to be the next 5 years in particular, if not 3, are going to be a massive shift in the markets here.
I do think it's important to point out to our audience, because we've been around, we've seen this through many cycles. The pendulum on regulation always swings, right? And it's clearly now swinging back to deregulation. And I think it over-rotated to regulation, clearly, under the Biden administration. But I did some research for the breaking analysis on previous regulatory failures in the United States. You might remember, of course you will, the S&L crisis, where the real estate lending, deregulation was relaxed. 1,000 banks failed, and it cost taxpayers $120 billion. This is in the 80s. And then remember long-term capital management? There was very little hedge fund oversight, and it nearly took the entire system down with a domino effect. You remember the dot-com, John? All you needed was a website and some kind of red herring, prospectus, and you could do an IPO. And that took $5 trillion of market value out. And then, of course, Enron, WorldCom, that led to Sarbanes-Oxley. And then the 2008 financial crisis goes back to derivatives deregulation, where you could package up all these crappy, class C and D assets and put them in a basket and call it diversified. And all the rating agencies overlooked that. You remember the Jenga scene and The Big Short? And so that led to a global recession. So my point is that, these relaxed regulations for the current administration, they very rarely blow up. but then former administrations or subsequent administrations, are subject to some of these, some of the gaming. And by the way, it's been largely, but somewhat bipartisan, Republicans and bipartisan. Republican Congress, and then Clinton signed, the looser accounting rules into law. But we're now seeing the pendulum swing to looser regulations. And to your point, there will be arbitrage. There's state regulations. There's maybe overseas stuff. There could be a race to the bottom where people are just going into jurisdictions that, have lower regulation, and they keep lowering the regulation to attract people. So, inevitably, when regulations are relaxed, people find loopholes and bad shit happens. But but in general, I'm very positive on this, and I'm really excited about it.
Takeaway from the AI action plan is that one, they're trying to make it very small business friendly. I love the SBA's presentation because, they want to get, these loans that they don't actually make loans. They go through their banks to get entrepreneurs the money for AI, mainly manufacturing innovation. That was their main stance, but also more a small business. Rob Hof is reporting in our weekly summary. He's going to post it today. He takes a little bit different perspective. He thinks it's a troubling, alignment towards, anti-woke, anti sentiment in the engines themselves, the bigger tech companies. He also says that's to be less regulation, which creates more risk. I think we need to get less regulation in the short term, like I said earlier, for policy and lawmaking for AI. Not so much to move fast and break things, but actually let it be understood and let the market work. Now he's got a good point about the big companies. Now I see it a little bit differently. For instance, one of the things that's clearly coming out of the trends is that the small business gets bigger and the bigger guys get fatter and happier. So the rich get richer. You're going to see the hyperscalers do well. I mean, Anthropic's doing around right now, $15 billion raise at $150 billion valuation in the Middle East. Clearly the oil money there is making an impact, but the small business is going to do more with AI. So I think there's going to be a small business entrepreneurial boom, but the middle market gets squeezed. The middle class companies are going to get squeezed because they're stuck between, do I go all in and compete with the big guys, or do I kind of have fortify my position and defend against the upstart? So again, we've talked about this in the CUBE before. For the people who know the CUBE, we've been saying this. So that's going to be a big thing. Now, Rob points out in his post coming out, and it was mentioned in the slightly in the Trump event, the big guys don't need help. Elon Musk is about to raise, $12 billion for XAI's stuff. So they don't need the money because the market's feeding them the cash. Again, I mentioned Anthropic, Amazon and Google, Microsoft, they're going to do well. Although Microsoft did have a blowback, they were kind of called out for their 9,000 person layoff while having massive financial performance. So I think you're going to start to see some conversations in the mainstream around our world, enterprise tech, the impact of large scale supercomputing, and then AI, how that translates into productivity. Well, the undercurrent to one more point. The undercurrent to Jensen's talk at the Trump event was the energy recognition, that energy dominance in the U.S. He actually complimented Trump, mainly because it's obviously self-serving to him. His GPUs suck up a lot of energy. Energy will be the key thing. And that's when J.D. Vance kind of hinted that a realignment of NATO was proposed. And we had said that twice on the CUBE pod. I think I said it a bunch of times when I was at the RAISE conference. If you have a data center and you have energy and you're a country that doesn't, you might want to relook at your alliances. So there is a scenario where the geopolitical configuration would be revolving around the economic impact of what energy enables. And it enables two things, crypto and AI. So that is not a long shot. That's not a conspiracy theory. I could see that happening clearly.
Well, to Rob's point, about the AI action plan, no surprise, since it reduces regulations to make it easier for these big companies to make money. He says, but I and others see some problem in particular, and I agree with him, the insistence on objective and anti-woke results, which is code for truths that Trump doesn't like. Here's the thing.
That's basically Grok, Twitter.
Well, but here's the thing, like the insistence, who's going to determine what's objective and what's anti-woke? I could care less about that ideology. What I care about, which is, by the way, absolutely the right thing, is to remove these handcuffs from these companies. We got a lead in AI. And I do agree with what Jensen says. He said, look, half the world's developers, AI developers, are in China. So if you get them hooked on U.S. Chips, and of course in his case CUDA software development, yeah, they're going to steal it, but they're also going to use it, and they'll become more reliant on it. Otherwise, they're just going to find ways to work around it. So
I
I
think that,
generally feel like competing is the way to go here. I don't care about the objective and anti-woke stuff being stuffed into these
the problem is the
policies. That's
problem with
just
the
stupid.
problem with that logic is that China will not just use CUDA, they'll replicate it and then create a chip. So unless it's fair, balanced trade and real competitiveness, it's kind of still going to be tilted. So
Yeah, but they're going to do it anyway, John. They're going to get a hold of the chips anyway. They're going to get hold of the stuff. They'll do it anyway. I mean, the problem with the Biden administration diffusion laws was it was too fuzzy. It basically, in my view anyway, pushed people away from the United States and actually created regulatory capture for some of the big guys. Whereas I think at least the new administration is reviewing some of that and making it a little bit more clear. I think you're right. David Sachs is doing a really good job, but I don't know. I'm always been for free and open markets. We'll see how these tariffs play out. To your point, but look, the U.S. was built on stealing IP from the UK, and that's what happens, with these rogue
what?
countries, these startup companies. It's true, it's true. The U.S. stole a lot of IP. I had a great conversation with
No,
Charlie G and Carlo about this.
uh,
He's quite a
what did they
historian,
steal,
and
Dave?
well, that back then it was the
Oh, back
industrial
then.
economy was just that's how the U.S. was formed in the 1700s, and and stole in 1800s, stole a lot of. Remember, the UK was the dominant supplier of the world. They were the low cost supplier of the world, and
I mean,
U.S. took that
hey,
over.
if the US was running China as a country and then they had a revolution they wanted to replicate, I guess I would be okay with that. So,
With what? Wait, say that again.
I mean, the British ran the colonies here and then we overthrew them.
Yeah.
Yeah, I mean, I guess this payback right there. Uh, Moving on, I want to talk about the IPO window because if you look at what's happening here in New York, you were here this week. It's really the energy in the building, energy on Wall Street is high right now on the IPO window. Next week, Figma is going to go public, we believe. That's going to be roughly almost 2,000 people in the building, which is unheard of here. They're going to close the streets down. It's so popular.
Awesome.
They're going to close the streets down and have like kiosks and whatnot. They're going to have a whole big deal here. A chip maker has got an IPO window. MBIC Micro, BitGo, Apple are also filing some confidential filings. Funding raises are rocking. You're seeing the trajectory, you're seeing the energy for this. Again, everything's coming together. So if the IPO window opens up, now's the time, August, September, October, you'll start to see the evidence, the S1. So if you're going to file an S1 and say October, November, or even January, February, they're doing the work now. So I can just tell by the buzzing in the rooms around here that the IPO window is definitely opening. Will it stay open? Will it open? It's definitely people are preparing, and the crypto folks are the first ones in. They're the first through the wall, and they're happy because they don't go through all the work that a normal company goes through. So we'll see how that goes. And of course, the SPACs are coming back too, because it's easier to do that. So it's going
Yes,
to be
back attack is
very
back.
interesting, Dave, to see this IPO window grow. That means there's going to be a floodgates of liquidity and a ton of activity.
Well, I mean, we have consistently said that the first half was going to be tepid, and I had thought it would slowly pick up in the second half. It's proving to pick up, a lot more quickly. A couple that I'm watching, we'll see if Sneak goes out in the second half. We'll see. I don't think Veeam is going to go out. I don't think they're quite ready, but maybe the market gets bubblicious and people want to, go
Let's talk about the
all up.
enterprise. Let's talk about the enterprise companies. So let's go public this week. Alphabet, ServiceNow, IBM saw results. Alphabet beat targets. Although investors are worried about the AI spend, ServiceNow crushed their numbers. I saw Amit Zavery was in Paris doing a little tour in Europe. The AI clearly, as we documented, is great for ServiceNow. IBM, it feels like IBM hit a single, right? They got on base. They didn't really strike out on this earnings, but I was expecting a little bit more from IBM, but they didn't do bad, right? They beat, right? So, but the stock got crushed and after hours and then kind of recovered a little bit the next
Not
day.
really. It got crushed 2 days in a row. We got crushed after hours. Yeah, recovered a little bit, but was way down yesterday and down today, another
What is
percentage
it at
point, I
right
think.
now? Let me see what it's at. Yeah. So
I think it
within
was down again another point today. Not point, but percentage point.
it's from last Wednesday, from this Wednesday, it was at 287. Now it's at 259.
Yeah,
Down almost 10% in 5 days.
yeah,
So
that's pretty significant. I mean, I thought the results were good. I mean, Wall Street really concerned about software and software margins, but IBM has, under Krishna, has transitioned from a consulting first, a services led company to a software led company. Now, their software portfolio, they're firming it up with obviously Red Hat and Hashi and others. So they're modernizing their software portfolio. Remember, they did a big transformation back in the day under Steve Mills, a lot of long in the tooth software. So they have this problem where they've got all this legacy, software, and they're trying to, modernize it. And OpenShift helps them do that. I actually think the street overreacted. I'm not as concerned about software margins. Software margins are going to be fine. Software growth was a concern, but the reason I like it, and they pointed to transaction processing, a function of the Z cycle just kicking in. So what normally happens is people buy the new mainframe sight unseen, and then they start adding in software in the next wave or the next quarters. So I think you're going to see transaction processing pick up, and so we're at just the beginning of the Z cycle, John. And as you
their
well
bookings
know,
are up. Their bookings are up at 1.5 billion from the last quarter. And again, you point out the software sales. Kavanaugh, the CFO, said on the earnings call that this was his story, that the software sales were kind of diverted to the mainframe side. The infrastructure side, which includes the mainframe, was up. So the question is that cyclical? And was that just, but overall bookings are up 1.5 billion on the quarter to quarter. So
the problem with IBM,
good there.
the problem the street has with IBM is they've heard this before, particularly under Ginny. She make a lot of promises. They'd play games with the definitions. They'd shove everything into the kitchen sink category and call it cloud. And then, they had all these legacy products in there that, made it look big and then it didn't grow. And Krishna has cleaned that up, to a large extent. They've still got some overhang from the legacy, businesses, certainly the old Watson, overhang, and some of the old software that, they're just going to be managed decline. But I'm I have much more confidence in the Arvind Krishna era than I have in previous eras. And so, the street wants to see it. They're like, okay,
I mean,
if you
actually,
miss,
well,
we're
it's not
gonna
yet
we
integrated. I think I like
if you
IBM.
miss on the portions of the business that you're promising are going to be the growth engine, we're going to hammer you, and that's fine. That's cool. The little pullback here maybe is a buying opportunity for some folks, and then gives IBM an opportunity to keep proving. But what is the best sign to me was the raise in selective guidance, particularly around free cash flow. IBM, they lifted its free cash flow guidance to 13.5 billion for the fiscal year, and they're talking, mid-single digit revenue growth, which is good, and software is going to grow at 10% despite the transaction processing headwinds. So I think that IBM is they're largely through this transformation to a software company, and their hybrid and AI stories working. They got $7.5 billion, I think, cumulative bookings in AI. I don't know really what that means. It's hard to tell if that's services or what. But I really like what IBM's doing, and Krishna has such clarity, and it's so much better than it was, 10 years ago or 7 years ago, 5 years ago even. So.
Well, you saw the SharePoint hack with Microsoft. Chinese hackers are actively exploiting a vulnerability on the SharePoint servers, targeting on-prem servers.
The street yawned, another hack of Microsoft. Nobody cares. It's crazy.
You saw Android phones are highly targeted by the Iranians. And now it's a full-on plug-and-play business model for malware as a service for Android. So if you got an Android phone, this is the time to check it out, make sure. But we're going to be a black hat, okay? this in a week. We're going to see what's going to come out of that show. But there's rumors that Sentinel-1 was being acquired by Palo Alto. That was a rumor. I saw some Palo Alto people. I asked them, and they said, "Can you comment on that?" Of course, they smiled and said, "No, no comment."
Well,
But
I
this
think
is
that makes sense, by the way. I mean, it allows
smile.
them to
I
compete.
sense the smile meant affirmation.
Well, it means they can compete more effectively with the likes of CrowdStrike. But and of course, back to Alphabet for a second, or maybe we'll come back to it. But their cloud business did very well. I had GCP at 35% growth. Based on their results, I think I'm going to up it to closer to 40%. And some of the survey data that I've seen, GCP's kicking ass, John.
We had Jim
And it's because of
Anderson in.
AI. AI is a real tailwind for those guys.
We had their AI stuff's getting very, very strong. They've simplified it from Next into seeing the results. They had an ISV forum in New York City this week. Independent software vendor. It was all basically their ecosystem. Jim Anderson, who heads that up, was with his team. They had their event. They came by and did a little VIP cube here in this set here, our podcast studio on the NYSE. And then we had a little meet and greet. You were here for that. The ecosystem in Google is blowing up. It's doing great right there, because the theme this year in this cloud wave is with AI is that this integration that's needed, and Google made bets early on integration, and they provide integration services, and their security piece turns out it's pretty damn good. So Jim is all smiles. The team is pumped. Amazon is feeling the same way. I talked to those leaders, Matt Garman. I talked with a lot of the leaders at AWS Summit the week or before that. They were in New York. Same thing. Their ecosystem's evolving. So we're going to watch the ecosystem leading into reInvent, and you're going to start to see, in my opinion, the big GSIs and some new targeted providers like Cadence of the world. Cadence got a unique recipe. And some integrators are going all in on certain clouds and betting the ranch on either AWS or Google. Now, Google's got TPUs as well. So I think it's going to be very interesting to see which formula works the best, because Google's basically being very transparent. Take our stuff, we'll integrate with you. And we got our marketplace. So they've got parity on the ability to consume through the marketplace, although Amazon's been around longer. Google is getting parity in a lot of the areas that are the Amazonian, strongholds. So we'll see how that plays out. Again, we'll see a lot going into reInvent in the next few months. In the fall, we'll probably get good visibility on that.
Well, I had thought, so Amazon's growing AWS roughly 17%. Based on Jassie's earlier in the year comments, I had thought they would be able to outperform that. They haven't as of yet. They've been sort of steady there. I don't know if it's because of optimization, if that's still going on in a big way, or maybe their AI is not as much of a tailwind as it is for Google. I mean, or it's just the law of large numbers. I know why Microsoft is growing so much faster. It's because Microsoft plays games with its numbers, and it shifts stuff in categories. It deprecates categories that are slow growth and then adds in high growth categories and said, look at how fast we're growing. And the street goes gaga. Very clever. Hats off to them for the financial accounting games. But of course, there is underlying growth there as well. But sometimes, as you know, it's hard to, not sometimes, oftentimes it's hard, or typically it's hard to really get through to the numbers. AWS has the cleanest figures. And Google kind of hides the ball too. But they, I think at some point are going to be breaking out GCP. At least I hope they do. They're giving more commentary now on GCP in terms of customer ads. And they make comments like Google Cloud grew, 32%, and GCP grew significantly faster in the quarter, or on the strength of GCP, which grew significantly faster. So you have to interpret through those comments and look at survey data and anecdotal data and just intuit. But so I'm still waiting for the AWS, uptick. And if it does, that's going to be super impressive because they're so large, but haven't seen it yet.
Yeah, we'll see. We'll see. I think Amazon, we'll see how the results, we debated that heavily last week, what they do. And again, I think it's going to be a big reInvent given what they announced. Again, I like what Google's doing right now. I think they're making things simple. I think the AI generation, they have an opportunity. A lot of folks have been playing with Gemini, Anthropic, Grok, and OpenAI, ChatGPT, and there's different results. People are seeing, some difference between Anthropic, Gemini, and Grok, for instance. One comment was, Brock's my Republican friend. Gemini's my
Yeah.
search assistant.
It's
And
true, by the way. I mean, it's definitely true. If you want to get the anti or the non-woke response, you go to Grok. It gives you different responses, different tones, less two-armed lawyering. But Gemini's awesome. I mean, and everybody thought Google was going to get killed by Perplexity and ChatGPT. Still may happen. We're spending more time, of course, on those other platforms. But a lot of times now, people are going to go to Google and go into AI mode. It's pretty good
I'll
and
tell
it's
you,
convenient.
I would not, I would not count out AMD in all this, because it's one company. We saw Lisa on stage there as well. Not to come back to the other one, but AMD, they're going to sneak up. I have a good feeling that AMD's got some. It's just my personal gut read. I think they're a sleeper big time, Dave, because if you look at some of the moves they're making, it's almost like hiding in plain sight with the GPU side. They got the main processor. Um, don't count them out at all and nipping at the heels of NVIDIA. So,
Well, I don't know. I mean, look, I don't count them out, but AMD was basically, you know, the number two to Intel, and now they're going to be the number two to NVIDIA. And they were a distant number two to Intel until they got rid of the foundry, and then Intel, fumbled, and then NVIDIA, I mean AMD has really done a much better job and didn't have the foundry albatross around its neck. So my feeling is AMD will get, its little piece of the pie, and which is great for them, and they will grow, but they are not going to threaten NVIDIA. Unless NVIDIA fumbles the way Intel has fumbled. So we'll see. I mean, but I don't think that's going to happen in the near term anyway. And so, just like Michael Dell built Dell on top of Intel and is now building the next wave on top of NVIDIA, Lisa Su is, churned AMD around based on competing with Intel, and now it's going to shift its focus to GPUs and inference. And I think there's a big market out there, but it ain't going to be the monopoly that NVIDIA has, in my view, with AI factories and CUDA and systems and everything it's doing in robotics and the libraries, and it's just NVIDIA is so impressive in my view. So
well,
that's my take.
NVIDIA's got a great opportunity in the enterprise AI if they can get that momentum going with the ecosystem. The question is, can NVIDIA get that done? I think the AI factories are perfectly positioned. For folks listening and watching, we had our first life sciences MedTech Unplugged here at the NYSE.
Yep.
To Brian Bauman putting that together. Also, we had some great crypto, as you mentioned, Tom Lee. Brian Bauman got those interviews. He's a magician when he gets great guests. You're going to start to see life sciences really explode in value because they're all perfectly ripe for the disruption with supercomputing, whether it's an NVIDIA AI factory or a Dell AI factory, or a combination of good hybrid cloud on edge with the edge and on-prem and cloud combination. They got all the data and they're ripe for agents too. So I think there's going to be a massive shift quickly in those markets because they need it. Health tech is huge. Med tech is growing. Bio is retrenching. Digital health is booming. So I think the demand for product is going to be significantly high from the providers and the consumers of it. So I'm very bullish on life sciences in general because robotics, AI, supercomputing all kind of hit that hard. So I think that's going to be the unsung hero for the second half of the year and going into next year is the discussion around conversations that we didn't normally have, like retail. Last year we went to NRF. We're like, okay, it's going to be an AI show big time next year. I predict all the healthcare shows, HIMSS, MedTech, digital healthcare tech are all going to be enterprise-like shows. AI, computing now factored in. Especially with wearables. I mean, come on. Some of the devices coming out are unbelievable.
I know.
Data-driven, no FDA approval required. I mean, that's what jumped off the page for me this week in those interviews. It's a whole new category of devices coming that don't need FDA approval. Now, the medical stuff on surgery, yeah, got to get that done, but big time opportunity.
Um, just to put a close out on AMD, I don't want to make it sound like I'm not high on AMD. I am, but I think they'll get whatever, 10, 15% of the market, and and NVIDIA will have the majority of it. Uh, and and I think to your other point, there's huge markets in these emerging sectors. Robotics, retail is so interesting. The whole supply chain thing that we learned about and covered at NRF and in our digital twin of NRF. So the market is just absolutely enormous. I mean, I think we shared earlier in one of the, I don't know, it was a breaking analysis or a Q pod, the sort of the waves and the size of the markets from, billions to hundreds of billions to trillions, now to tens of trillions of dollars this market is going to be. And, the Michael Dell commentary on the BG2 pod, I thought was really awesome. I don't know if did you catch that?
I did. Yeah.
It was just for people who didn't see it. It was, the first part of it was actually really good. They're doing the $1,000 per child thing, and Michael's involved in that, as is Brad Gershner. Phenomenal. Congratulations to those guys for getting that off the ground. Really, it's mice nuts in terms of the impact on the debt. It's nothing, and it just helps young people, get better understand and appreciate capitalism. But later on in the discussion in the podcast, which, by the way, you saw it. His camera angles were not great. I have to work on that. But he made a really fascinating point. Gershner was asking him, how real is this? And what do you think about the productivity hits? And Michael's like, look, a lot of people are talking about 10% productivity. That's pretty easy to get to. A lot of people talking about 20%, 30%. We ourselves at Dell, for things like coding, are seeing 30% plus. Certainly Benioff has said that 30, 40, 50% coding improvements. You're hearing that at Microsoft. Now, that is coding, but overall, people are saying, yeah, 10% productivity improvements, that's very doable. And so when you think about $115 trillion annual global economy, you're talking about over $10 trillion in increased productivity, 10 trillion. And we're probably spending, I don't know, a few hundred billion, maybe let's call it 500 billion on AI. So maybe we're not spending enough, and that's 10, 11 trillion annually, times whatever 1.02 with the global, or 1.0 whatever with the global economy growth. So his point was we may be underfunding, and my reaction to that is, okay, well, if you're an enterprise, what do you do? Because we've seen before, being first doesn't necessarily pay off. I mean, Facebook wasn't first in social media. And I mean, the examples on and on and on. Dell wasn't first in PCs, and so it may not make sense for people to go too hard into AI at this point. Maybe they should continue experimenting. The flip side of that is, if you wait too long, you could be left behind and disrupted. So I think most enterprises that we talk to and we survey are being cautious about over rotating to AI, but at the same time, they've got their foot in the door. They're hitting singles. They're still hitting singles, in my view, and they're going after low risk, low hanging fruit. Somebody asked me the other day, if you got a big NPV on AI versus a small little single, big NPV that could be transformative versus a small single that could deliver value, what should you do first? And I'm like, clearly get the win. Get men on base. And I think that's what's happening with AI right now.
We got a big earnings week next week. We got Microsoft, Meta, and Amazon. So we'll see how it's going to go. Big surprises for me this week were one surprise was I had a chance to interview Lars Rasmussen, who's the founder of Google Maps. He's in town. He's part of this Greek contingent doing an amazing event, kind of like the old ancient Greece kind of attitude, very entrepreneurial, as well as Peter Vesterbakata, who's the founder of, remember, Angry Birds? He's also the founder organizer of Slush, one of the most elite startup founder events for entrepreneurship in Helsinki in November. So most people don't think that Helsinki is a place you want to go visit. The Greek islands I can get in May. I'm going to go to that event, but I'm going to go to Slush event too. I was invited. We're going to go.
Really?
Yeah. So it's apparently Martin Mikos tipped me off on this. I've heard about the event. It's kind of well documented. They just attract the pure founder and successful founders who give back. So very communal. Turns out Peter and I worked at Hewlett Packard together back in the 90s. And so we bonded on that in different.
You worked with a lot of people back then.
I
All
mean,
the
HP
HP
in the
alum.
80s and 90s really set up some great talent. Super community oriented, absolutely understands the Silicon Valley formula, replicated it in Finland. He calls it Fin Est Bay Area. Fin for Finland, Est for Estonia. So apparently that Estonia, Finland, Sweden kind of Scandinavian vibe is huge entrepreneurial culture because they have great education and they're smart. So he's essentially replicated the Hewlett Packard, the Silicon Valley way, and it's working. So I am super impressed. And plus he's famous too in the sense that, Angry Birds at one point had 98% market share in China, in India, and in the US in high 80s. It's just a dominant entertainment. And he's got a new game coming out. He wouldn't tell me about it, but he did bring a teaser prop, which is a robot. Now it's got something to do with a robot as a character. We'll see. He's got singers involved. It sounded very cool. So that was my surprise for the week. And of course, the Google event was just a phenomenal executive kind of a forum, VIP set of interview some leaders in the channel partner network. So that was kind of my surprise. And of course, the action just with the Trump thing was just, made me go, wow, our CUBE pod is going mainstream. Everything we talked about for the past year and a half, 2 years is on the main stage. So it's good to see. I felt a little bit like I said that. I know I said that 2 years ago. Yeah. So it's like I felt like I wanted to jump through the camera, through the screen. So it was kind of fun.
What else is happening?
I mean, it's summertime. We're going to do a lot of media weeks. We're going to have a big AI factory, hackathons to executive leaders coming in. I know you and I are putting a program together. I think the future of the data center theme that we're putting together is going to be pretty compelling. So if anyone's interested in sharing their vision or success playbooks, best practices around large scale supercomputing enterprise computing, whether it's cloud-based or on-prem, a lot of on-prem action certainly. And for startups, if you're an enterprise startup, you're listening to this, ping us, send us a DM. We're putting together a killer program. I don't know if you want to say anything, Dave, but I think we got a great lineup.
Well, I think what we've been doing with Brian Bauman and the NYSE has been amazing. And now we're putting it into high gear. And what I love about the approach is we're going into verticals, AI and financial services, AI and life sciences and healthcare, AI and manufacturing, AI and retail. So we're really getting some phenomenal input from practitioners and leaders in those industries.
I mean, they've been AIified basically.
Every industry has been AIified.
Everything that's been an IT kind of enterprise thing, and now that it's large scale, it's impacting the output, the discovery, the formulation of product plans, the productization, the value creation, extraction is all happening with a tech bent. So it's perfect for us. Now we'll cover it at that level, the innovation strategy and the innovation conversations. But it's pretty amazing. I mean, some of the discoveries that are being accelerated are phenomenal. Talking to some of these leaders off camera, the stuff that's happening is unbelievable. I mean, reproductive rights, for instance, those firms that are doing testing. You talked to Babson Therapeutics on the blood stuff.
That was unbelievable. So my wife came home the other day. She had, blood taken. I was telling her, I said, "You remember what happened to me last time I had blood taken? They couldn't find the vein, and they used the other arm. Both my arms were like sore for days." And she's like, "Yeah, that just happened to me." So this device from Babson fits in your finger. They train like cashiers at Costco. It's that simple. It's basically a device that fits in the finger. It's got a little tiny test tube like this big that flips up. You poke your finger with a pin. You take the test tube, drips the blood in, done. Think about it. You get usually 6 or 8, 5, 6, 8 test tubes of your blood get taken, and you're sitting there like a tool. And then the next day, that day, they're like, "Have some crackers." And so he was telling me that they use 93% less blood for the test That's Babson. It's unbelievable. And it's available today in Austin in 30 locations, like drugstores, Costco's, supermarkets, and they can train anybody to do it. And, they love it, the supermarkets and the retail stores, because it brings people in. And the patient loves it because it's simple. And the process is much faster. The doctor gets the results much more quickly, as does the patient. It's
Yeah.
amazing, simple.
I was talking about Theranos, how much that's helped his business. He says absolutely, he knows people are involved, but that actually helped his business. Give him publicity, because the aspect of the Theranos scandal was, oh yeah, we want easy, right? So he's building it. So I'm impressed by the scale. And again, Johanna over here at the NYSE, she was amazing putting this together. She put together most of the lineup because they had an AI bio event here at the NYSE, and we just piggybacked off that and got some great guests. And again, this is the formula that works here, but
Then
it's all good, David. We got a big
just
week. To me, the
yeah,
earnings next week, I'm watching these earnings.
Amazon, Microsoft, Apple, Meta, ARM, Qualcomm, Samsung, and more. Wow. Wow, that's huge. So then, I'm going to update my cloud report once Amazon and Microsoft announce.
It's going to be a very big earnings week because it's going to really set the agenda, kind of Q2 numbers. This will help shape the IPO window we were talking about. So I think based on the market today and the objects behind me today going crazy, I think there's going to be a lot of reset of mindset in this next quarter. We'll see how they do. If they come out flying through the gates on the results.
So far, earnings have been pretty good. I think, maybe earnings came down a little bit on Liberation Day when they announced all the tariffs.
Liberation,
so dial back a little bit.
Liberation Day in April, really, as we discussed, screwed the market up.
Yeah, well, but think about it. So analysts dialed back some of their earnings estimates, and for the most part, the S&P companies are beating earnings for the most part, and so that's a good sign. I don't know. Do you think the tariffs have kicked in yet?
No, I think the tariffs are being managed. I mean, this is my take. Remember, remember on the CUBE pod, we specifically said, you even used the word "damn the torpedoes." Some people were like, they're going to go forward, but we basically came to the conclusion that Liberation Day and the tariffs, all that political theater, just put the pause button. Everyone kind of pulled into neutral, okay, kind of slowed the boats down. Now it's full throttle, damn the torpedoes, because if you look at the earnings, you're starting to see layoffs. Microsoft just laid off 9,000 people. They didn't have to do that. They're flush with cash. They're trimming. Okay, they're already.
I mean, look,
jamming.
We're not Europe with full employment, so people will complain. But it's up to the company, what they feel they need.
They're getting a lot of blowback on that, big time.
Well, it's called capitalism. I'm sorry.
Nutella had to come out today and make a statement because he got hammered on that. My point is, I see the throttle coming back online. The boats are moving full speed ahead. Damn the torpedoes. So I think there's no headwind. I think it's very much a pro-growth market. And I think we'll be surprised next quarter's earnings when people start showing some of the productivity gains. And then the Q4 will, if it continues, will be a monster quarter. If that happens on the trajectory of the AI coming off into productivity and production, that means Q1, Q2, and Q3 is IPO time. Everyone will flood the market.
I had thought that, honestly, I thought that the first year of Trump's administration was going to be pretty turbulent. I thought the S&P would end up flat to the previous year, maybe even down a little bit after 2 years of growth. Looks like that prediction ain't going to be correct. And I think we could see growth in 2026. Something
again, not to bring up David Sachs again, but I think that the feedback coming from people on the street, which has nothing to do with Sachs, is these new markets need regulatory enforcement, right? You're talking about banks, you're talking about money, right? So it's not like they just roll out some new money currency. You have mechanisms like who's going to back it, who's going to manage it, who's going to enforce the policies that aren't even written. So until there's policy and lawmaking, you can't have regulators regulating or understand what's happening. So I think until that gets done, I think what's going on in DC with the pro-Trump era on energy and AI and crypto, because AI and crypto are bounded by energy. Energy policy is the secret. Bill Ty and I talked about this many times on the past few months. in great detail. Energy policy, energy economics, energy products, energy management will be the number one resource thing to work on. So, that once that gets lightened up a bit, then real policy can be written, real laws can be drafted. Once that happens, and then these traditional sectors like finance and healthcare and life sciences that are regulated, oil and gas, they're going to just go right in line and just go with the spec. So I think, to me, that's the big action item that comes out of all this. I mean, and so until that happens, yeah, we'll have some arbitrage. There'll be some winners. But once the laws kick in, it's going to be a clear future. I think stable coins will be the key to success. That's why the hype is massive right now on Circle. By the way,
Well,
just got a new board
to you-
member, Adam Selevsky, news out there. So
Oh, no
again,
kidding. I didn't see that. So to your point about energy, this is in my earlier point about China. They're going to figure it out. And so that's why I'm sort of leaning toward Jensen's, premise, even though it is self-serving for him. That Cloud Matrix, which is Huawei's version of, the GB, 200 and NVLink 72, by sheer brute force and massive access to massive energy reserves, they can replicate, to a large extent what NVIDIA GPUs can do. And China's got the energy and it's cheap. And so they can throw energy at the problem. And that's a real constraint. I talked to Furrier about this the other day. He says, Dave, somehow the U.S. is going to figure that out. And I go, yeah, I agree. They're going to figure it out, but it could take them, several years to figure out. And I think getting rid of the
energy in the world right now, Middle East.
I think, yeah, for sure. And I think getting rid of the regulations will help speed things up. But for now, China's got the energy. And I generally, John, think that people are underestimating, China. I think we've got a little bit of hubris in the U.S. Oh, yeah, we're ahead. We got to stay ahead. We do have to stay ahead. I think China, a dollar spent in Chinese currency and the productivity that they get because it's so less expensive is equal to, some multiple of dollars deployed in the U.S. I don't know what that multiple is, 2, 3, 4, 10, 30.
Speaking of AI and energy and Trump, Caruso's CEO Chase was on stage as well. Part of the big action plan is data center build out, Dave. So, and then skilling the workforce. So, the robotics conversation we had on theCUBE a few months ago kind of spoke to that same thing. So, but, NIST, policy boards are going to start coming into place, restoring manufacturing and semiconductor, in the face of Intel crying for a bailout. That's my words. They're not crying, but that's my takeaway. My first reaction to the earnings.
What are you saying? That Intel's what? Crying for a bailout?
My reaction to their earnings yesterday was, if I'm the U.S. government, I got to save Intel. I mean, you brought this up before, but
well, their strategy to save Intel is wrong. They should get Intel in a headlock and say, look, you got to spin out Foundry. We're going to take a piece of the action. We're going to give a piece of the action to TSMC
as you say, volume's everything. In the earnings yesterday report, in the commentary, the CEO said, if we don't get a large customer for 14A, we might have to not do that.
Gee, duh. I mean, how many times have we said that they need wafer volumes?
Hold on, let me finish my point. I think that's a cry out. Like, look if you love Intel, everybody, step up and give us some business. Now, I'm not saying
we've published the plan, John. We've said how they can get wafer volume. And by the way, I've always said 14A is what matters, not 18A. 18A was never going to really change anything. 14A was it. And I contend 14A, I think, is really amazing, but they're not going to get there at the time frame that they desire without help from the TSMC. And the thing is, TSMC could take that and they could push out the time frame and bridge with their process technology. I'm just going to say it again. The answer to saving Intel Foundry is to spin it out in a joint venture, literally give TSMC a big chunk of it. I don't know what the right amount is, in exchange for them bringing over IP and talent. U.S. government, U.S. taxpayers take a piece of it, throw Intel a bone, give them a piece of it if they want, and then get the big hyperscalers and NVIDIA and Meta to guarantee wafer volumes, whether the yields suck or not, and make that happen, and then take your foot off the neck, which they could easily do, of all these, regulatory constraints around the big hyperscalers and do it for the good of the country. And then the U.S. taxpayers will own and I would call it the American foundry. The plan is laid out. I've laid it out several times. I've shared it. It's gotten to the Intel board, which I think they obviously rejected it because they wanted to get more value out of the dying asset that is Intel Foundry, which they're not going to get. I'm going to say it again. This is IBM microelectronics times 10, where IBM was forced to pay Global Foundries to take their foundry in exchange for guarantees of, I think it was 7 nanometer and maybe 5 nanometer and subsequent process designs. And Global Foundry couldn't do it. Why? To your point, didn't have the volume, didn't have the cost structure. So it's over in that sense. And so they're going to end up being, a foundry that's not leading edge. I mean, leading edge.
You never know. First of all, get Dave's plans online. Check it out. It's on Breaking Analysis. My point is that what Trump's America Action Plan speaks to is that we are in a race, and he compared it to the space race, this AI race. So if the U.S. wants to have space, you need NASA to build rockets. Now you got SpaceX. You got other companies, you got Blue Origin and then some other firms. So if it's a space race, you got to get the infrastructure. And I think that's the point of this. So I encourage everyone to read the America's AI Action Plan, because it's got a lot of kind of policy in there. I love the space race analogy, but it's also, if you read through the politics, it's about data center build out. Okay. It's about China and the Middle East. Those are the three major forces: US, China, Middle East. Middle East, they're the independent, they're the Switzerland, they got the oil, they want to serve everybody. It's China, US, that's it, nothing else. Europe, they're playing catch up big time. They're not even close to being in the arena yet because they've been swimming in regulation. So I think the renaissance of technology with this race will spawn a generation of innovation. We'll see. I mean, that's the hope. And once you get that going, then sovereignty kicks in, borderless communications, borderless commerce kicks in. You can't have borderless commerce without sovereignty. So that's what's happening in the crypto market. So it's very complicated 3D chess happening right now. So I love it because, if it works, you're gonna have a flourishing economic landscape. That's the bottom line. So we'll see. We'll play it out. Let's dig into that next time, Dave. So. And plus next week is earnings. We're gonna have a lot of fun with that one. So let's have a good weekend, I guess.
All right, John. So yeah, good seeing you again this week, and look forward to get back down in NYC shortly.
So getting all quiet here. Everyone's left the floor here on the East Coast. It's closing time. And
Kramer's probably recording.
Yeah, I'll go take a video since I know I'm not supposed to take a video.
Yeah, you're not supposed to. Right?
All right, Dave. See you later. Thanks, everyone. We'll see you next time.
Thanks, everyone.